I remember a day I went to my wife and I'm like, listen, I might go to prison. I didn't do anything wrong. But I had to work, still smiling, still leading maybe 50, 60 people.
Yeah.
While in my mind, the ship was actually quite sinking. Luckily, we had a few things which were working really well. So we were able to exit at that point, and the German company, Döhler, was able to invest. But the learning for me was go slow and be very careful on the cash flow and the spending and the finances. And this is something which I learned the hard way.
Welcome to Season 3 of the Founder Funded podcast, a podcast for searchers by search experts where we explore the route to business ownership without having that $1 million idea. I'm your host, Carl Lundberg, CEO at Jarl Lederman and founder of the ETA Awards. Let's get into it.
They built it like, a Lego that is not very sturdy, but it's working.
Yeah.
So before changing or moving anything, you need to really understand how it's working and then doing it with a plan. In Egypt, if you have a loan and you don't pay it, you go to prison. There were some people that I was sure that these guys are useless. 10 years later, I look at the way it was done. Actually, they weren't. No dreams for me. I think I can reach the moon, hence the name. But maybe I get there, maybe I don't. I don't want the anxiety of going there.
This episode, we have double masters, SME leader turned investor and managing partner of Moonbase Capital, Ibrahim Rahim. Ibrahim, great to have you on. You've been involved in SMEs from very early on in your life. It'd be great to hear more about the family business and kind of your background that brought you to where you are today.
Sure. Thanks for having me. Very exciting. My father started a company that does flavors and fragrances. So it's a B2B business where you sell flavors and fragrances to different factories. I started that in the 80s. I joined as soon as I finished my university. I worked there for 4 years. It was interesting because I liked it, but I knew that I need to learn way more. That me and my father used to argue about simple business matters. And I thought for me to become good at that, I need to learn a lot. So that's why I went to did my INSEAD MBA, which for me was a big thing because as a kid, I was really very bad at school. So for me to go to a top MBA was not my character at all.
Yeah.
But I was trying to fix what I thought, was broken. So I went to do my MBA and then afterwards went on to do consulting. But so that's my father's business basically.
Okay. And that was
And that was based in Egypt, exactly.
Yeah, okay.
This was based, so I'm Egyptian. I was born and raised in Egypt.
Yep.
And this was based in Egypt.
Okay. And then you went off to INSEAD and did your MBA. And then you went into consulting. And interestingly, consulting in Milan. And we were talking just before we started rolling that I asked, you must speak Italian then, but actually it was more because it was covering the Mediterranean as a whole. Is that right?
Exactly. I mean, at that point, McKinsey's Milan office was in charge of the Mediterranean area, which included Egypt, and they had no activity in Egypt. So the idea was for them to start having an Egyptian team. I was the first one in that. And then we, over the next 4 years, were able to open an office in Egypt and start the operations there. So I could not do any studies in Italy because I don't speak Italian, but I worked everywhere from Dubai to Turkey to Germany. Like I had to basically rotate, and I helped open the Egyptian office.
Yeah. Wow. Okay. And then after you do a stint in the family business, arguing with your dad about how to run a business, decide you're going to go and learn, go do your MBA, go and work at McKinsey. Now, I suppose, you've got some credibility behind you. Come back into the family business and then 10x'd it with your brother. How valuable was the academic piece, the MBA, and the experience that you got from consulting in being able to do that?
I have to say that consulting and the MBA were great in terms of sophistication. So I thought I can structure an idea, I can communicate it well, etc., etc. However, when I returned from McKinsey, I was a bit cocky, I'd say. I would be more of, that's an easy company, 50 employees.
Yeah.
How hard can it be? I've been working with much bigger topics. I was wrong because operations is a very different beast. So it took me the first 4 years of really learning how to operate properly and manage people. And even though I did this before, but I have to say what I really am a big fan of is the mix of both operations and consulting. I think consulting alone is great, but managing people, leading them is a very different story. And if you're like, it's like learning about how to give advice to someone how to swim is very different than if you're in the pool and so in that regard, I'm very happy, very grateful with the mix of both operations and consulting. Consulting helped me a lot in structuring the strategy, being able to communicate, stuff like that. But to lead a person and to manage a team, actually, consulting doesn't teach you that at all.
Yeah.
On the contrary, actually.
Yeah,
Teaches you the wrong things. Just because the team you have, at McKinsey, when I left, I was engagement manager. But at that point, the team you have are so ambitious and are so good that they work despite you, actually.
Yeah. You're not having to manage them much. Got it. Okay. So actually then it was more the hands-on experience combined with those things that brought you back into the operations and gave you that ability to then really take that business to the next level and then ultimately exit?
Yes. So what we've done is when I left the business and then came back 5 years later, they had some cash, which for me was interesting because when I left, they were quite short on cash, but they did a really good job over these 5 years and they had some cash. And I made it a point to spend all this cash into growing the business so we went everything from, we were like paper based, and then in 1 or 2 years, we had SAP, everything was not paperless, but almost. We did rebranding, we structured it. There was a few businesses that had sprung out since these 4 years. We reorganized it. So we did a lot of changes. I have to say that it was a big learning that I went a bit too fast because in 4 years, even though I knew the business, my father's business, it's very different, but still, I went way too fast and I had debt that I needed to pay because I started a new business, me and my brother, which is juice concentrates. So not only flavors, but actually getting fruit, mango, guava, tomato, etc., and create paste and then sell it to still B2B, the same thing. But in order to do that, we had to take on a lot of loans. Yeah. Egypt loans are expensive, it's not so easy. So and we spent all the money in growing it. And this type of business, you need a lot of working capital because you buy the fruit during a month and then you have to sell it all through. But the good thing is it's extremely important to be very efficient operationally. So we became really good at the operations piece. But we were almost going to go bankrupt in a few instances, and it was tough because in Egypt, if you have a loan and you don't pay it, you go to prison. Even though you're and to work under these circumstances where I remember a day I went to my wife and I'm like, listen, I might go to prison. I didn't do anything wrong. But I had to work, still smiling, still leading maybe 50, 60 people, while in my mind, the ship was actually quite sinking. Luckily, we had a few things which were working really well. So we were able to exit at that point, and the German company, Döhler, was able to invest. So from there, we went up again. But the learning for me was go slow and be very careful on the cash flow and the spending and the finances. And this is something which I learned the hard way.
Yeah. Okay. Well, it's a great experience though to have. So you then went to Stanford after that kind of phase, and presumably that's where you first learned about search funds.
Yes.
So you went that you were going there anyway, and then when you were there, you learned about search funds, and that's the kind of the turning point where you decided you wanted to get involved in that space.
100%. So What I was at the days when I was about to exit the family business, I went to an event in San Francisco about the future of tech, and I was blown away. I'm back in Egypt or Africa doing tomato pastes, and I'm thinking I'm so cool, and these guys are flying with everything else. So I was like, if you want to really try out your luck or your hand at proper, next phase in my career, I thought, do it in Silicon Valley.
Yeah.
A friend of mine gave me the advice that Stanford is a very good way to enter into Silicon Valley. So I went to Stanford with the concept of learning about startups and VCs and tech, and this is my angle. And I did this MSX, which is almost an MBA. It's a year and a bit. You have most classes with the MBA class, so it's very similar to the MBA. It was a good year for me to reflect, and there is where I heard about search funds for the first time, and I totally fell in love because I like SMEs. I went to McKinsey and INSEAD just with the dream of taking this very small father company and making it much bigger. As a kid, this was this thing my father always told me, take this company and grow it. So when I saw an opportunity to work with people who will go in a similar thing, taking an SME, trying to grow it, and also given my consulting background, I thought, okay, I can help as a consultant, I can also mentor, I've done it myself, so I just fell in love. And then, and also honestly, tech was not the thing I felt is mine. It was also COVID, so the whole being so far from home during COVID was tough.
Yeah.
So then I decided to go back to Europe, try different things. So I did some investing in real estate and started search funds first on my own without Moonbase.
Yeah.
And that's how I got into it.
Okay, wow. There's so many people who I talk to, including me, that didn't know anything about search funds, and then when they heard about search funds, suddenly absolutely fell in love with it, and it's the only thing that they're interested in.
It's crazy. I mean, I remember the Peter Kelly and Gerald Risk class was the only class in my life in 2 MBAs where I was sitting first row. Like,
really?
I never did that in my life.
Yeah.
I'm like, I loved it. I really felt this was and it makes so much sense. In the beginning, it's hard to grasp it, but once you look at the details of the search fund world, you're like, it makes so much sense. Everything is aligned. So yeah, I know I fell in love for sure.
Yeah. And actually, Peter Kelly and Gerald Risk, I saw in September, a couple of months ago, sitting on the stage at the Stanford conference this year, talking. And I said to people, I've been to lots of conferences, and normally the conferences are more about the networking and less about the content. And this was the first one where I was so invested and interested in the content. And
they're great. The way they communicate, the way they also, you can see the passion they have to the model, which is transmitting really well to the students. Now I love this class.
Yeah. No, that's great. Okay, so you started investing personally first, and then I guess at some point decided to set up Moonbase.
So I was quite worried because I'm not from Europe. I'm Egyptian. I'm not a finance guy, so I'm not used to this doing funds and stuff. I just love the concept. So when I started, I was quite not sure if I'll be able to fit in and add value. But what I figured out was that my profile was at the time quite rare to have someone who wants to do a fund and at the same time is a operator, consultant, and not from the private equity or not an investor in general. So I found that, and also back then it was easier to also get allocations and searches because there was not so many investors the way there are today.
Yeah.
So I found that actually I have something to add, and I built Moonbase around this concept of how can I support the searchers as much as I can, given that I was an entrepreneur of an SME myself or an operator of an SME. I built everything around how to really support them. So for example, I went back to my friends in McKinsey, Stanford, mostly INSEAD actually, my buddies at INSEAD, and they agreed to help my entrepreneurs to advise them in different sectors. As you know, search funds, the amount of sectors you see is huge, it's really big. I mean,
yeah, absolutely.
At McKinsey, there was like 4 or 5 sectors everyone is playing in. In SMEs, it's crazy. So I thought if you have 50, 60 people who could help in talking about the sector, answering questions, and also functional. These guys, some of them are sales, some of them are marketing, some of them are ex-CEOs, so they can also give a lot of advice. So everything was built around how can we help, how can we support, and that's the DNA of Moonbase until today.
So you on the Moonbase website describe search funds as combining the stability of private equity with the agility of venture capital. I think it's a really good way to sum it up. Perhaps you could talk a bit about that point in your perspective.
I believe you have the best 2 things from private equity and the best 2 things from startups or VC in the search fund. So from private equity, what makes it so special is the fact that the company exists. You can go visit it, you can look at history, and this we have as well. And the other good thing is leverage. You can use the leverage to increase your returns. So these 2 things, we have it. However, VCs, what really makes VCs, in my opinion, is the entrepreneur. The fact that you have an entrepreneur who will do the job basically and run with the ball. So we have this as well in SMEs and search funds, as well as the fact that you as an investor could diversify quite well, which also you have in VCs. So it does have the agility and the way. So I always say we do a private equity job with a VC method.
Yeah.
You know what I mean? Because so that's why I think it's somewhere in the middle between these 2.
Yeah. No, you're absolutely right. And I think it's the focus on that entrepreneur, the searcher, is the real differential, isn't it? You know, if you're going to pure, let's say, lower mid-market private equity, the operators that may be incumbent in the businesses often, not always, but often are going to be far less ambitious and less able operators than you might get running a search.
I agree 100%. It's a very different mindset, and also the mindset starts from the day they decided to be an entrepreneur. It's very different than hiring someone for a job later on. So I agree with you 100%.
There's a lot, because of its connection with academia, you know, search funds, obviously now most closely linked with Stanford, but also ESA in Spain. And there's a lot of academic research that's done. There's also things like the Stanford Primer that effectively tells people these are the things that you do if you're going to run a successful search fund, and these are the types of businesses that you want to buy. How closely do your objectives and the kind of characteristics you look for align with the Stanford Primer type characteristics?
I have to say that more or less it aligns quite a bit. So I really believe the traditional way of investing in search funds works and worked really well. So we don't deviate much. However, each investor has their own flavor, let's say, or their own way of doing it. So in our case, for example, if you look at the low risk piece, we of course care about businesses that have enough margins that can take on a hit, or a business that's, as my friend Monte always from Scipio is another investor in Barcelona, always puts it, forgiving businesses, which basically means a business that will give you a chance as a new CEO who's not from the sector and had never been a CEO to make a few mistakes in your first or second year. The way he always describes it is something like having a client who needs you. So it's like switching costs is high.
Yeah.
So even if you do mistakes, your clients will still, forgive you.
Yeah.
So for sure, I do like businesses that have been growing steadily, that are quite safe, et cetera, et cetera. Personally, as a quite ambitious entrepreneur myself, I in general like businesses with high growth. So I think it's more exciting for me as an investor, for a searcher to sit on a table and try to dream of how to take this business and grow it, rather than just pay back the debt and sell it the way it is. So I always like to see what are the odds, or what are the probabilities that this investment would return at 10x, even if I don't necessarily have to invest only if it does meet 10x, but at least I want to see that there is this chance. So if we all work hard, we can get there. But more or less, I'd say I'm following more or less the same framework that I learned at Stanford.
Yeah, got it. And you mentioned earlier that there were fewer investors before, and so it was easier to get an allocation in a search. Now there's a lot of investors. There are more searchers. Do you have as much ability to be as selective about those deals and those searches? Has the pace of growth of searchers kept up with the pace of new entrants of investors?
I think it has. It's different now. I mean, in the past, you would receive, and I'm actually not, I started at the end of 2020. So when I talk about the past, it's actually midway in the history of the search funds in Europe, because there's a bunch of very good investors who started 5 years before I did. And these guys would talk even more extreme case, but when I started, you would get a searcher every, 1 or 2 searchers a month. It was like a slow thing. Now you get 1 or 2 searchers, actually even more a week.
Yeah.
That said, if you are an investor that kind of want to add value and have your own niche where you will help, you cannot help in everything, and that's also the beauty of the model. You don't need to help in everything, but if you're able to add value, and if you're able to have searchers you work with say a good word about you and like to work with you, because searchers talk to each other a lot. So if you serve the searchers well, you would be able to get good searchers and you'll still be in the game. So no, actually, I've been lucky to more or less get really good searchers, and I wouldn't say I'm picky actually, because there are searchers that I like that other investors don't like, and the opposite is true. And for example, I worked with a few searchers who are a bit older in age. That's many investors don't like that. For me, it worked really well, and I'm very happy I did that, and I'm going to continue doing that. So,
you mentioned the words "serve them well." You know, if you serve, and that's, I think that, to me, what that means is if you're a good search fund investor, there's plenty of deal flow, because I think there are some investors who come into the space who don't necessarily fully understand that what is expected of them as investors, and how the model has been so successful historically is that there's mentorship and guidance that needs to be provided by the investors as long as capital, because just pure capital is not going to result in the same outcome as we've seen historically.
100%. Investing in search is very different than investing in anything else. And investors need to really know that. You do not need to add value in everything, but you need to have your niche. You need to say, for example, if you're an M&A professional, then M&A will be the part, but you need to give this time and you need to support in that part. Maybe you'll be very good at the board. Maybe someone else will help emotionally because they have time, and they will. I mean, if each one needs to carve their own value proposition that they would give or they would offer to the searchers. And then the searchers, the one, depending on their own story, would choose from a menu of okay, I need people in M&A, I need people local, I need people ex-operators, etc. They would create their own cap table. I think that's the best way. So yeah, I agree with you 100%.
Yeah. Are there sectors or business types where you're currently stepping back a bit or even avoiding at the moment? And conversely, are there other areas that you're becoming a bit more bullish and more keen on at the moment?
I mean, naturally, the anything that has to do with advancement in technology is a two-edged sword. So there are businesses where you look at and you say, wow, now with AI, we can really improve margins, we can do something there. However, the issue is that it's very hard for us to compete with the VCs. They have so much more capital to invest, and they have a very different way to look at tech and R&D, etc. So this whole tech piece is becoming a bit tricky, and it has positives and negatives, especially that we take on, as search fund entrepreneurs, we take on debt. So you don't have the option really to invest too much in tech and growth. You of course, you do as much as you can, but it's not the power we have.
Yes.
So anything in that world, if it's disruptable for us, we really, take a step back and try to think if this makes sense or not. Another sector which, again, can be positive or negative is the whole defense world, because now there's been a lot of investments in defense, which from one side is a sector that's growing could be with good returns. So from that side, it's quite good. From another, there's a bit of ethical ideas that you might not want to invest in such an industry. But for sure, it's another industry that's changing a lot these days, and people are trying to understand how to deal with it. So I would say these are the two sectors these days that I'm looking at differently than I would in the past.
Yeah, interesting. It's some really interesting points, actually, particularly about the tech. Yes, can the industry be changed? Can you improve this business through investment in tech? Probably. Will you have the capital to invest enough in tech? Probably not. And so it's a really sensible point to...
The other risk is that we are not from the sector. So you're not the person to really come and disrupt the sector. But the startup entrepreneur, in many cases, comes from the sector, know the sector well, they did the thesis, so they are much better positioned to beat you when it comes to disrupting a sector.
Yeah, got it. There's been significant growth in the model. You said, Ibrahim, that kind of goes back to probably 10 years-ish ago, where the real European growth started. Are there any particular areas within Europe that you're most excited about, or that you think has got the most untapped potential at the moment?
I mean, let me give you two countries which I wouldn't say untapped, but I'm still very excited about, which is Spain and the UK. I think Spain and the UK I'm seeing really good deals being offered. I am excited the quality of searchers, and I think these countries are still pushing hard, and I'm very excited about both of them. Two countries which are up and coming, and I think I'm becoming more and more excited about. One is Portugal. Portugal is there's a lot of searchers these days who are focusing on Portugal, as well as Poland. I think Poland is coming really in strong. So these are the countries I would say are now on my radar.
Interesting.
In Europe.
Yeah.
Of course, I mean, if you go outside Europe, LATAM is a very different beast.
Yeah, yes. And actually even east of Europe, there's some stuff happening now. I think there's at least 2 search funds in the UAE now, maybe more. But yeah, that's interesting, particularly Poland. What about Germany? It's a huge market. It doesn't seem to have happened in the way that one might have expected.
Germany is very interesting. I studied in a German school as a kid, so I speak German quite well.
Right.
So starting in this world, I thought Germany will be where I'll focus. It's a huge market, etc. When I started, it was very clear that, or the word on the street was, take care, searchers will not find businesses easily. There's many of them who don't find. So I took my first 2 years maybe without any investments of searchers in Germany at all. And then I started more. I did directly with searchers, but also with accelerators, and it worked quite well. So far we have 3 investments in Germany.
Okay,
so Germany for us has been a success. These days I'm a bit worried again. I'm not sure how easy it is to find. I mean, Germany, you need to be a bit older in age. You need to be a bit more an operations person.
Yeah,
the market is also a bit competitive, but if you're a certain profile, it's much easier for you to find a business versus someone who comes from private equity, younger. So you need to fit in a certain profile. But as a market, it has great potential. It has really good SMEs. It's just harder to close.
Yeah, so cultural particularities of that region that make it more challenging. What about, so we talked about the company, with the region, the companies. What about the entrepreneurs themselves? Are there, and I have some thoughts on this, but it'd be really good to understand for you personally, what are the main characteristics that you look for in a really good entrepreneur?
We bucket the entrepreneurs into 2 buckets for us. One are the operators. And these guys are usually not that good when it comes to searching, just because they're not used to working on their own, and they're not used to, doing this sophisticated due diligence, blah, blah, blah. But they're really good once there is a company. And then there are the consultants / private equity guys who are really good at the first phase.
Yeah.
But when it comes to running a business, it's it could be a bit of a challenge. And so I work with both. But for me, I'm more and more leaning towards people who have some operations, because it's hard. It's really hard. I know from the outside, people can be like, it's an easy way to run a business. It's not true. It's really tough. You go into a business already existing with people who are already doing a good job, and you're becoming the leader. So it's not that easy. So I feel operators are people who are from day one. It's like a fish you put in water, they find their way.
Yeah.
Consultants, private equities, they figure it out. They're smart. If they're humble, if they listen to advice, so they will figure it out. It's not like don't work with them.
Yeah.
But then I really look at the company and try to see if this company fits with them or not. The whole situation, it's a bit harder for me. The ones that operators who come from pure huge companies, multinationals, I worry a bit depending on their experience.
Yeah.
So I like more if they're the other extreme, which is entrepreneurs. Ex-entrepreneurs I like a lot, because an entrepreneur is someone who did everything. They know a bit of everything, and they're very ambitious, etc. People who are used to going up a ladder without any entrepreneurial experience, unless they have something to show, why are they doing this, and why are they suddenly becoming entrepreneurs? And if they did any entrepreneurship in the past, it becomes a bit hard to bet on them.
Yeah, no, I agree. And we get the same thing where you see some people who say, well, I've got loads of M&A experience. I haven't got operating experience, but I've got M&A experience. I've worked in private equity, or I've worked in investment banking. And then you find out it's Goldman Sachs, or it's, KKR. And you're like, well, that's just not transferable, right? The M&A of, a $5 billion deal is nothing like buying an SME.
100%. That said, I always look at this as entrepreneurship. I think it's art and science. So I have invested with people who are brilliant. Yeah, and in order to work in Goldman Sachs or one of these big names, you need to be quite a good guy. So definitely. It's entrepreneurship. So in some cases, there's this person who, he didn't do it, but he's humble, wants to work, and you still bet on them. But it's tougher bets.
There's definitely a threshold of intelligence for them to be able to have done that thing, and also commitment and hard work and ambition, right? 100%. So as long as you can harness it, then...
I mean, for me, it really boils down to looking them in the eye and saying, that's a person I'm going to work with in the next 10 years. These guys will succeed somehow.
Yeah.
Let's together figure out how we'll be successful. And I'm very happy to help and work. So I'm very happy to be with someone who needs a lot of support. For me, that's actually a plus, not a minus. So I have no problem doing that.
Okay. Turning to the kind of the operations side, once the acquisition closes, and you kind of touched a bit on, it depends on whether the person's a natural operator or if they've got more M&A experience. But, what are the most common things that you see people, or the biggest challenges that you see people come across in the first 100 days as the new CEO?
I think the biggest challenge is really understanding the business. And I say really, because when we do the due diligence, we're standing outside guessing, in a way. I mean, guessing is maybe a tough word, but almost. If you're inside, you get the chance to understand it properly. And this is not easy, because many cases these companies do not have a proper ERP that you can just pull reports from. And many of the people are not that sophisticated that you can just, interview a few and just get the full picture. So I would really say the biggest challenge in the first 100 days is to understand the business and work closely with the people in the business to get them to trust you enough to tell you everything, and also to get them to trust you enough for you to lead them, because leadership does not come by you owning anything. Leadership comes by them trusting you, etc., etc. So I think that's the biggest challenge, is how do you enter in a way that you can learn with total humbleness, not that you're the boss. No, you're actually less than they are in the first 100 days because you don't know anything.
Yeah.
And at the same time, building this slow trust and being able to then lead them. Of course, in the meanwhile, if you are able to do a quick win here or there, but I would say on the periphery, I'd very much pro that, because people usually in SMEs are fed up of working with a SME owner who's not changing things too much, and they feel there's more potential. So to come and refreshing feeling of this leader will take us to a new place is very exciting.
Yeah.
That said, don't be ambitious in terms of changing things or making decisions or moving too fast. Take your time. Especially the first, I'd say, 100 days for sure. Even the first year, I'd say you need to take your time. And the other challenge I would say is working with the ex-founder, because in the first 100 days they're still very involved. This can be the best thing and can also be the worst thing. So this is another point which could ruin things quite fast.
Yeah, I think that. As you say, trying to win hearts and minds of the team who are there, and actually, but maybe do some things on the periphery if you can. It could be a good idea actually to find out if there are some frustrations in the team about things that weren't changed previously. If they're the things that you can get done quickly, it's kind of a win-win, right? Because you're helping to build those relationships, but you're also getting some stuff done.
100%. Just don't change anything in the model.
Yeah.
Like the business model at the beginning, because it's usually the founders are not that sophisticated, which means that they built it like, a Lego that is not very sturdy, but it's working.
Yeah.
So before changing or moving anything, you need to really understand how it's working and then doing it with a plan.
Yeah.
And it takes time. Also, your board doesn't usually know anything. So you need to also let them take time and get them more involved. And so, I agree with you.
Yeah, got it. So in your past, you've obviously dealt with significant growth in your family business, and lots of other experiences. What lessons in kind of scaling, operations, culture, people, systems do you want to really get across to your searchers early on? What are the key experiences that you need to share to, I guess, help them to avoid making mistakes you've made in the past?
I mean, one mistake I've talked about is moving too fast too early. So this we already talked about, but this for me keeps coming up. I think the trick is to talk to your suppliers, talk to your customers a lot. Understand, as you said, from the clients, from the coworkers, what can be done better, what was in the past, trying to understand the industry. Once you have all of this and trying to put in places finance or matrices to understand KPIs, etc., so you can really understand the business, and then you come up with a strategy, a growth strategy. And a growth strategy needs to be verified and really done in conjunction with your board. But then here's where you say, okay, that's what we have. This is where we could go, and these are the things we can go to get there. And it's an art and science, because it's not only a scientific thing, it also has to do with buy-in of your team. So the way for me, it was very nice. I did it really well is even though as a consultant, I could have came with a paper, hey guys, that's the way we do it. I worked through these workshops where we just talk about, guys, where do we think we can be? And then they started giving ideas. And then, okay, what do you think we can do? So we really worked together. In this case, I got someone to help moderate it for everyone, including myself.
Yeah.
And to my surprise, the outcome or the ambition they had was way more than what I thought was possible. Which for me was amazing, because I thought these guys are not ambitious. They were way more, as well as the end result. They were so willing to go the extra mile because it was their plan, their thing. And then you talk about values, you talk about things like this. So it's the culture. They build the culture. And so to sum it up, I would build it with the team, with the people there. Not coming with the sophisticated, okay, I know my stuff, I will tell you what to do. It's more of let's all think about where we can go and try to really build it together.
And what I think that's a really good idea, and I have some experience of learning that myself, right? But what if the route or the direction that the team come up with is so far away from what you've got written on your clipboard?
You discuss it with them. Because when I took over the business from my father, me and my brother, there were some people that I was sure that these guys are useless. 10 years later, I look at the way it was done. Actually, they weren't. It was just me coming from a naive perspective. So I really think it's about discussing and about convincing them and them convincing you. Of course, there will be people who will not go with the plan of everyone or in your own plan. And these guys maybe need to leave. And in many cases, they need to leave. I mean, you cannot have, but you going against everyone, the problem is you will not be able to implement it. I mean, it's easier to have it on paper, but these guys need to do it. So I would still insist that you go ahead and take your time, try to have them think through these problems, try with them and then you will notice, is it because they're stuck to the past and they don't want to change? Is it because they're afraid about their own things? And in this case, you also try to manage it. Like, don't worry, we will grow. You will not lose your job. Or, okay, we'll do this step 2. You know what I mean? Like you try to manage it in a way. But to go against your team is never a good idea.
No, it won't work. Yeah, got it. Okay, and I guess this is a similar point or a similar question, which is, there is this, so-called silver tsunami of, SME owners who are aging and approaching retirement all across the world, really, but certainly in Europe. And then this theory of, an ambitious, youngish searcher comes along, and they're going to take over and deploy their energy and their ambition into growing the business and really making a success of it. It's a great theory. And actually, sometimes I think it's easy to get too attached to a theory without thinking about, in reality, is this actually what happens? How do you see that play out in reality? Does it work? Does it happen?
It's a very good point. So if you ask me about the reason my best investments are or the worst, both I would tell you the founder. So the founder and the interaction with the founder can be the biggest gift. It can be even can be the worst thing that ever happened to you. So this piece is actually very, very delicate, especially if you're going to involve them somehow in the business. So the theory will never work if you don't get the founder part right, because the founder is much more powerful than you are emotionally to his people. Especially in SMEs, the old founder is like the king in their castle or the queen in their castle. People love them, even if they're not so good. I mean, I did so much to our employees. I don't want to talk about it, but so much stuff. Until today, they still say, nothing is like the days of your father. Although they were less paid, the growth was less, everything was less, but they love him. And so to go against the founder in a decision where you say right, the founder says left, will never be a good idea. So managing the founder, I'd say, is not easy, and you need to get this part right. And we can talk about this for hours. Yeah,
and so you get that part right, and then the theory does kind of play out. Okay, got it. I know you attend the International Search Fund Centre Investor Summits, and I've heard there that the topic of changing the changing investor landscape of the search fund world. It comes up often, particularly with reference to some of the points we touched on earlier, which are, just money coming in, pure capital without that support. But how do you see that playing out looking forward? I know that there's obviously been growth in Latin America, for example, but also in the Middle East. What excites you about these changes that you can foresee, and what worries you a bit?
Look, I believe growth will come for sure. There's no way to stop this train now. It's no way, and it's a good model. The model works. People are liking it. So I think the real challenge is how can everyone who's currently in this ecosystem make sure that we grow in a way that's still true to the values that made us get where we are today. So there has been times when people in the ecosystem were trying to work against new one coming in because they were going to ruin it, and I understand the concept, but I don't subscribe to that. I think the solution is for all of us to work together with any person coming in, whether searchers or investors, and trying to work closely with them, educate them, and making sure they do it right so we all flourish. And at the end of the day, you as an investor and you as a searcher will choose who you work with. So even if it grows too fast and there are some people in there that are not good investors or are searchers who really are not the ones who should be here, they won't succeed. Either they won't be able to raise, or you as an investor, or you should not work with them. Just don't work with them, and you can still create your own nice bubble in terms of searchers you work with.
Yeah.
But I believe this growth part is something that there is nothing we can do about it, and I would embrace it rather than fight it.
Yeah. Okay. So for a listener tuning in to this episode who might be a prospective searcher or an investor who's interested in search funds, what's one piece of advice you'd give them?
An investor, I would say simply understand the model really well, know your role you should be playing. It's a very different investment than VCs or PEs or any other investment, actually. It's really very specific type. So this is my advice, is talk to people who do it already and learn it, and spend time, and don't be arrogant like, that's an easy investment. And for the searchers, I would say, make sure you're in for the right reasons, because from the outside, it looks easy. It's not. And it's not an easy way to make money, or it's not an easy way to become a CEO. It's a long and tough journey that you need to really have the passion to do, and you need to have humbleness of, again, talking to people, understanding it well, and doing it the right way. So I would say, don't rush into it unless you know it's for you. And if you rush into it, do it the right way, which is, don't try to just close any cap table because you want to close.
Yeah.
Choose the right one. Don't just close a deal because, no. Do it right, or else don't do it.
Yeah. Great advice. And there's a standard question that we ask everyone at the end of the episodes, which is, what is your dream now, and how has that changed from when you were young?
It's a very interesting
Younger.
Question. Yeah. I'm approaching 50, so I'm not anymore. But my whole life, I subscribed to this idea of having a dream and achieving it. And this was really my thing. Like I was actually quite good at it. Like I imagine it and I went it, and I can give a lot of examples. I don't subscribe this concept anymore. It's very interesting because I believe that if I put a dream and I want to reach it, it stresses me out. And I put a let's say a landmark where I think I want to go. But the truth is I can maybe go way more or less. And to have the anxiety of measuring it against an arbitrary idea in my mind is not anymore working for me. So what I do now is, I think, of course, my dream is to grow Moonbase in a way that would be meaningful to this industry. And being meaningful, I mean helping everyone and helping it grow in a good way. So I really want that. However, I will do it by focusing on today. I love what I do anyways. So I'm doing it as good as I can. And then it will open up the way it is. So for example, my dream when I was young was to become the best at running a company, running an SME. And that's everything I did was, how can I become the best operator ever?
Yeah.
And then at some point I figured out I don't want to operate anymore. And life took me into investing in search funds and something totally different, which I never thought I'd be there. And now I love it way more. So if I had the dream and I stuck to it,
Yeah,
I would have been stuck.
you wouldn't have been doing the thing that you-
So
yeah.
no dreams for me. I think
Yeah.
I can reach the moon, hence the name.
Yeah,
but maybe I get there, maybe I don't. I don't want the anxiety of
Amazing.
going there.
Yeah, no, that's a really good philosophy actually, and something probably I could take note of. But yeah, that's great. Ibrahim, it's been really good to have you on. Thank you so much for joining us.
Thank you for having me. It was really a pleasure talking to you.
No,
Thank you so
no
much.
worries. Likewise. Don't forget to follow us on Instagram at Found and Funded Pod and LinkedIn at the Found and Funded Podcast, and comment who you'd like to see us sit down with next. If you have any questions about what we discussed today, drop me a message and let's have a chat.